happenings on the political front are really gaining attention at this stage of the game, with the administration sworn in and markets now awaiting cabinet appointments specifically, which is, of course, key to any of the reforms that we could see over on that end. What's your reading of the political scenario right now?
Morning, Alishia. Well, I think that, as you say, this is really crunch time for Nigeria. There's been, a lot of build-up. Everybody has spoken for a very long time about Nigeria's potential. Jonathan had 9 months or so as president before the elections, but the focus is on being re-elected. Now he's been re-elected. He has the mandate. There are 4 years. The clock's now started ticking. But I don't think that people are looking to be comforted purely by Nigeria's potential anymore. They want to see momentum. The Yar'Adua administration on the whole, we saw, a sort of an easing of some of the momentum that we experienced under the Obasanjo administration, particularly in terms of private sector friendly policies that stimulated business. And I think that there just needs to be genuine momentum in that regard. At the start of the last administration, we had a state of emergency declared on power. We're now at the start of another administration, and I'm not sure that there is a noticeable difference for most people in terms of the consistency of power they experience. So, more talk will not do, and I think that in terms of the investor community, it's clear that if we get a few things right, that there could be a significant momentum, but there's still very much a wait and see. And ironically, I think that the in-country institutional investors are more cautious than the internationals in this regard, because they are more weary from sort of disappointment of previous administration.
Of course, the market is keenly awaiting to see whether execution of policy is actually, follows through. Looking at one of the sectors or one of the items on the agenda, I mean, you've touched on power, but the other is privatization. To what extent do you see privatization taking on a new kind of pace or a new kind of energy in the Nigerian market?
Well, I mean, I think that these things are all, clear indicators. We've had a long-running fiasco with NITEL, for instance, that, I'm not sure that anybody, hand on heart, can say they really understand where we are in that regard. We're waiting for progress on the distribution companies, within the power sector. And, I believe it was last week that there was some news flow that the expressions of interest had not been reviewed or approved by the presidency, so progress in that regard was going to be delayed. I think that getting something done early, in the first sort of basically in 2011, will go a long way to reassuring investors and Nigerians that actually this is not just going to be a talking shop administration with a lot of promise and not much delivery.
Well, just moving on to another news item. Last week we had the CBN issuing a circular to the markets where banks have to set up agricultural desks within 6 months in a bid to stimulate real sector lending. What is the market made of that move, and how do you see banks reacting in terms of setting up these desks within that 6-month time frame?
Well, I'm not sure how the market's reacting yet, but I think that this is just, further underscoring the thrust of the current CBN governor, seizing the initiative and seeking to drive real sector lending. I think that the good thing is that a lot of the seemingly short-term easy wins that banks enjoyed in recent times have dried up. So it is to their benefit to also seek out engage with government, whilst the regulator is also aligned with this purpose, to work through some of the impediments to credit extension to these sectors. The requirement really involves skilled personnel, people that have an understanding of the agricultural sector, to be positioned in these banks. The fact that the CBN has issued a circular means that banks must do it. I mean, it's not really an option. And I think that given that we're looking at a sector that is 40% of our GDP, but like 1 or 2% of the banking sector's loan book, if we can begin to match those two more reasonably and see that gap close, then we have a real chance to make some significant strides in terms of inflation in the long term and in terms of, growth for the banking sector. And then just, altogether, Nigeria moving to the place where, again, the potential of the sector is not lost in, wasted produce and the like, but actually we see Nigeria reaching full capacity on the agricultural front, and then, beginning to export, generating, greater foreign exchange earnings than it is doing at present from agricultural produce, which, everyone agrees has a tremendous amount of potential.